All right, Carl, welcome back. Tuesday, turnaround Tuesday, we had it. We were calling for a rally. We were way oversold on the daily. Got down to about a 21 RSI on the daily. So, we got near that year low, but didn't get it. We were talking about warning, a little late to be short, and here you go, bounce. I see possibly up to 13.15 on the high end, which is a technical 50% retrace area. So, I don't see much more than that. I wouldn't be buying this rally for more than a trade, and a good chunk of it's already on. So,
yeah, I don't trust this rally further than I can throw my neighbor's house. So, I'm still the only dip I'm buying right now. I mean, I'll scalp it. Don't get me wrong, but I'm not going to swing this long.
Yeah, you're still buying. You're still buying Copenhagen,
still buying Copenhagen. Yeah,
not the market.
But yeah, I mean, we could ultimately even go higher than that. But I think something I looked at today was 306 quarter. There's some stuff around 12.13, and that lines up with the fibs. And I'm not a fib guy, but there's stuff there, and ultimately, there's stuff at 24, 26, just numbers off the top of my head, but we could go higher. I mean, there's games, we still have the quantitative easing going on, right?
Yeah, we got probably another 10 days, maybe another week and a half left. I think it finishes at the end of next week, officially.
It goes through the 30th.
Through the 30th, okay.
Yeah, well, the POMOs do.
Yeah, the POMOs.
And
then, you got the dollar, again, trying to put in a little bottom here in that last touch there. It looks bullish. I mean, the dollar looks bullish to me still for the rest of the summer. I think we're going to see a rally, and probably, I wouldn't be surprised. I'll throw it out there now, 78 to 80. I wouldn't be surprised to see those numbers on the dollar here. Just the chart looks like it. Oil, 99, again, rallying from the 96 level again. We touched into the 95s. So again, we're stuck in that 95, 115 until that breaks on a close. Your next 20 points is not known, but, again, buy the dips, all the rips, nothing new there.
Yeah, I'd be a little careful. Crude number going into tomorrow's inventory number. Looks like we're going to have a decent draw.
Yeah.
So
we could
be a little careful. Short wise. I'm not. Yeah. I can't. Yeah.
Yeah. Continue. Again, day trade only for me. Same with the grains. The grains are great. Grains actually went down again today. At least wheat. I was trading wheat short side yesterday. Short side again today. But I think tomorrow it'll rally. It's just it's overcooked, and it had a pretty strong finish today. I actually bought a little into the close. So I think wheat will actually give us a little juice to the upside. Where your downside protection is, at least right now. It's interesting. Gold, again, little rally today, but it's just kind of vacillating near its top. Silver, just, did that bounce from the 32s to 38, but isn't doing much here. So those things have gone back to low volatility, dead in the water once they killed all the speculators out of the market.
Yeah, I thought the trade in the bond market today, and I'm talking about the 10-year, was maybe a little bit ominous. Hedgeye, Keith McCulley's a straight shooting guy, and he was talking about that, and Centelli was talking about the 2 years, so they were comparing apples to oranges when, you know what I mean. So that's the misunderstanding.
Greg Simmons, Scope Labs, and we were talking about this last week. I don't know if you watched the video we did. We were talking, that's the trade he really was talking about. Short the long and buy the short. As far as bonds, it was like really, it's basically it costs you nothing to put on the trade, and you're going to get paid. Just got to be patient on it. So yeah,
I mean, there's some talk that Bernanke is going to do some stealth quantitative easing 3 in the form of trying to control 2s and 10s, but I just don't know how you pull that monkey off. So I guess I'm not smart enough to get my brain around that just yet. I haven't really looked into it and thought about it a whole lot, but I can see how they would do that.
Well, it's interesting just looking at the chart of the 10-year. I mean, it's just been straight up here but it looks to me like the top was put in there, 124. They rang the bell, and it does look, like it's going to roll over again. Which again, just the time of year and Congress finishing up here, for the summer recesses coming up, it should roll back over. But with Congress in session, that's why it's been continuing. The 10-year's been continuing to rally, but I think it will get sold off here Matter of fact,
yeah, I tend to agree with that. I don't see any way that the Bernanke can do QE3 here, okay? And we all know it's coming to an end. He has said it enough times, just like Jim Rogers had said today. Yeah. I believe him on that. Yeah, I believe him on that. I believe he is not lying to you about ending QE2. Right. Economic data is turned ahead of time. I think it's going to be a tough summer for the longs. Yeah. I actually looked at the charts tonight, and I stuck my neck out on the line. I said, I think we're going to tag 1153-ish ES this summer.
Yeah, I agree. Anywhere from 1120 to 1180 looks doable. So that's
but that's still early last fall levels. And
like we said,
that's not a crash.
It's not a crash. I don't think we're going to crash between now and the election next year. I just don't.
Because if we do crash, that the Bernanke is going to come in, and so there's this ever-loving put in the market from the Bernanke.
Right,
I mean, it's unreal.
But a nice 10% sell-off, which, from 1373 only gets you, to 1200, and why not a little extra juice, 15-20%, as we always say. That puts the fear of God into people, and why not a 15 to 20%, which gets you down to that 1120, 1150 area. So I see it as real possible, but it won't be anything further than that. I agree with you completely.
No, I just don't see unless the bond market really came unglued.
Yeah, which is possible.
But that's where they'll come in and protect the bond market then in a stealth fashion and do that kind of stuff that we're hearing the rumors about today. Not here, not now. You can still borrow money. You can still get it historically cheap.
So what do you think we got the rest of the week economic news wise? What are you watching? What do you like here Tuesday?
Well, I mean, ultimately you got to look at our jobless claims. I mean, I guess I don't know what we're going to print on those. I haven't put a lot of thought into that yet. But I don't see how we're creating jobs here. We still have $4 gasoline here. And I mean, it's abnormally high across the country. Yeah.
PPI was up today. You got CPI tomorrow morning. That'll probably follow the leader there. More housing craft tomorrow, which is useless. Crude, I think, is probably the most important.
But I think we were going to talk about housing at one point and how that is important because let's just say when rates tick up like they do today, when you want to buy a new house, it makes it that much more expensive, right?
Yeah.
And so you're seeing this stuff. I think you're really going to start to see it in the refinancing, weekly mortgage refinances, and ultimately it's going to impact the purchase of homes. Okay.
Well, it has to. Again, we've talked about the headwinds in the housing marketplace. Not only did you have the credit bubble, but now you have a real recessionary housing problem, where there have not been these jobs over the last few years. Let's call it 5 years. And so those buyers aren't there to pick up that slack that was created by a credit bubble. And then, as you said, credit rates could not get and cannot get any lower, so they have to tick up, and that makes all prices come down in
I mean, how much cheaper do you want your money? It doesn't get much cheaper than this.
You could get buyers at negative. How are you going to get it at positive? So.
Well, I mean, there are people that have real jobs and make some money, but
yeah,
I think
there were people buying houses in 1978 when it was 18%.
Yeah, and it was a good time to buy a house historically, wasn't it?
Right. Yeah.
Yeah, that's right. That's right. So, but I mean, I think what was interesting from last week is one of the K. Schiller boys put out some prediction that we had 25% more to go in the housing market. Now, I had said a month or two ago 12 to 18% more at the most. Markets always go further than you think on the upside and on the downside. It's the nature of the beast. It's the dynamics of the market. And they snap back. So I'm just not so sure with the government involved that it's going to snap back so quickly this time.
Yeah, I agree with you. And I always, like when the bubble was going off 03 through 05 in housing, I always thought as a target, because I agree with you on the statement that things overshoot up and down. So if you take kind of that projection to the downside, I was shooting somewhere in that 96 to 98 price levels. We only got down to about 2002 or 3. overall.
Well, I think right now here we're at about 2,000 levels.
Did we get that
for
one?
houses.
Okay.
I'm just looking at what's selling right now, and it's at about 2,000, 2001 prices.
Okay. Well, again, I don't live, breathe, and sleep it every day, nor do you.
No, but I'm in I'm in a housing market. I just bought a new, we just bought a new house and we're selling one. So, I'm in the market. Yeah, I know what's going on. I've been trying to time this. You know what I mean? So.
Yeah, so, that's it. I mean, again, today was just a simple trend day again. You had to buy the one little pullback if you wanted to on the ES for 5 points. It's not a big move. Most of it happened overnight. So if you're day trading, little to do there. Except, again, grains are moving nicely. Watch these grains and watch the oil. Oil gave you another $1.50 even after a gap up $1.50. So this is what I'm continuing to watch, is I'm watching the range, the widest range trading vehicles as a trader. That's what I like to do. And ES is there, but it's really, it's not of much interest. As you said, there's no swing trade, long or short there right now. Get it up to 13, 15, 20, and I'll lay into a short more on a swing side, but not right here. And then, the bonds are interesting. I think you need to be, short the long, 10-year, and if you want to hedge it with a long the 2-year, it's a good way to do it. But it's pretty quiet out there, here in, mid-June, Flag Day.